All right, hey there. Good morning, everybody. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 11th of January 2022, in an overcast, slightly cool morning here in Boerne, Texas. I'm Chris Franks with Texas West Capital, and we're going to take a look at the markets today, including something you may not want to see. But I've had a lot of questions about, if the top isn't in Bitcoin, then what are we looking at and whatnot, and so I'll give you a look at that. And you know what? Even if that is the case, guys, you've still got a chance, if you didn't get out, to potentially get out at a much higher place than where we are right now. So we'll take a look at that and some other things as well. Hopefully y'all are doing all right here. As always, you can join us at howtotradetowin.com. We'd love to have you there. Tier 3 is the place to be. Even 1 month with us at Tier 3 will set you just eons ahead of where you'd be in a month on your own. Cost to benefit ratio, I don't know. I think it's pretty good. We attempt to make it that way anyway. It says 80 plus hours educational content. I think we got probably closer to 200 now. So lots of stuff going on there. By the way, guys, hey, listen, if you haven't done it yet, there's the link there. And as you can see here, that will get you then access to this All Access Asia Pacific EWI free pass event. Doesn't cost you any money. You don't have to put in your credit card, anything like that, guys. But if you haven't done it yet, I suggest you use the link, sign up for their, I don't even know what they call it again, their EWI club or something like that. But you get access to stuff like this all throughout the year at different times. They can be a little bit pricey overall with their services they have. But so if it's normally out of your reach, this is a great way to get really good information for free. Like I said, multiple times throughout the year. So jump on there. You can see everything that they've done over this last, since right around, I guess probably about a week ago, a little bit over a week ago till now. So if you haven't done it yet, guys, I would suggest you definitely jump on there and do it. You guys are always asking about free stuff. That's about as good as the free stuff gets, to be honest with you. So there's your links on that. Let me see, who's all here? Blaze, what's up? Nevlusian's here. Keith is here. Hank checking in. Still in Thailand, I believe. Till next month, I think he said. Crypto Mowgli, what's up? Claudio is here. Chris Day checking in. Fernando, what's going on, man? Bamboo, what's up? Bitcoin Anarchist, man, I like that name. Checking in from Australia. Good to see you, man. Oh, man, Australia. Gosh, but now that I think about Australia, you guys are having a tough time over there, aren't you? I mean, it's gotten quite draconian over there with the lockdowns because of COVID over there. So, man, oh, man, I hope you're doing all right, man, with that. I don't know. There's a certain bit of psychological impact on people of a country who've been locked down consistently. You're dealing with it pretty harsh over there, Australia. I know, is it Austria, I think, that's also, or Denmark, I think it is, that's also being locked down again, right? But that can play havoc on your mental side of things to be locked down like that consistently. So hopefully you guys are doing all well and taking care of yourselves if you're having to deal with that. What's going on, Dana? Travis checking in from Jackson, Wyoming. He says it's only -6 degrees over there. Jeez, oh whiz. It's kind of cold. Ali, I'm doing great. How about yourself, man? Oscar checking in. Hank says, good, you're bearish. Let me add to my longs. I'm not bearish, but I do want to give that, since I've had a lot of questions about it lately, I figure I'll go ahead and give that look at it just so people can get an understanding on that. But then again, I'm never bullish or bearish. I'm always just long money, guys. That's what it's all about. I think a lot of people, a lot of amateur traders, they get scared with the idea that maybe the market's going to go into a bear market, right? Because they don't know what they're doing. They don't know how to trade, and they think, oh, God, they just want to buy in and have it go up, right? But you can make so much money in a bear market. Whether you're shorting or if you can't short, like here in the U.S., you have so many limited options as far as crypto goes for shorting and whatnot. But you can buy those bounces along the way, right? And some of them are going to be pretty extensive bounces. There's still a lot of money to be made, guys. The market doesn't just go one way. It goes both ways. And as long as you understand what you're doing, there's no need to be scared of a bear market. You can, it's unfortunate. We see a lot of our friends out there who are struggling, when you go through a recession or something like that, people losing jobs or having trouble with money and, stuff like that. But, again, guys, as traders, there's a ton of money to be made either way. So I just want you to keep that in mind. Don't be fearful just because a bear market may come in. Find your way to make money with that. That's what it's all about, guys. Oh, Hank, you're going to be in there till the end of February, most likely, in Thailand? Oh, man. Semi-retired now. Hey there, Crypto Girl. Always great to see you checking in. Hopefully you're doing well. Blaze, you said it's getting bad in Canada, too. You talking about the lockdowns or stuff like that? I hadn't heard about that yet, but I know the biggest ones I heard, I believe, like I said, were Australia and then I believe it was Denmark over there. And it's tough, man. Again, I've studied psychology. It's one of my master's degrees, and it's understandable. It's tough. To be told you can't get out and go do things and whatever, or if you do, you have such strong limitations on what you can do. There is always a price to pay mentally for that. So yeah, what's going on, Jarrett the Great? Good to see you there. Oh, man, these idiots. I don't even understand what they're posting in here. This these letters kind of thing, but we'll just keep blocking them there. Let's see here. Hank says he bought BNB at 410, 415 area. It rose to 31. It rose 31 cents. Is that what you're saying? You're staying in Thailand for a while longer? Well, Blaze, stay careful, man, over there if you guys are going to go through that nonsense too. Anyway, guys, yeah, so that's where we are kind of with that. Let's go ahead and, you know what, before we get into the charts, let me make sure I talk about a few things real quick here. First of all, guys, I came across this. If you're in the U.S., we have a lot of issue with trying to figure out, it's a lot of work to figure out all your trades and all that information that you need, right? Well, supposedly, I just saw this in my feed this morning, this TaxBit company, taxbit.com. Anyway, they're loaded up with Coinbase, PayPal, FTX, all these kind of big names. And apparently what they're doing is they're giving you the information that you need, the trade you made, your tax basis, all that kind of stuff. Form 8949, all that kind of stuff that you need to file your taxes. So if you're on one of these platforms, I'm not sure how this is. Like I said, I just saw this right before the show started here. But they said that they're going to that it's going to be accessible through like Coinbase and all the platforms, I think is what it said. So you'll have to check it out, but check it out. I'm going to check this out here later today and see about it here. But that's pretty cool, man, especially if you're trading NFTs or DeFi and all that stuff where you've got all them different trades and all that stuff going on. It's free. I'm not getting paid anything to shill this to you or anything. I just, like I said, saw this right before the show, and I thought, man, if you're like me, it's miserable trying to get your tax stuff right with all this, all this, it's not really the information isn't easily given to you. So if you're on one of those major platforms, I guess that they do it for other platforms too, but you have to pay a fee, is what I understood. But anyway, guys, check it out if you need that kind of information there. Let me see here. Moogs, what's up, man? Yeah. Remind me about TSLA later. Sure. Let's see here. Other thing. If you guys remember earlier this year, I was talking to you about the fact that the Fed board, some of the members were getting, were trading during the pandemic, trading on basically insider information. They know what they're going to do, whether they're going to raise rates or drop them, right? And all this stuff that they're going to do and money they're going to push out and all this stuff. Anyway, we talked about it, right? And then we hadn't kind of heard anything of it. Warren, I'm not a big fan of Elizabeth Warren. She's got her head, way up her rear end. I don't think even the stuff she tries to do is really for the good of anybody. I think it's just she's so full of herself. And that's not a political statement. That's just the way she seems to approach things in general. But she's requested twice now in the last few months the information that the Fed has on this all this trading that went on, right? by their members during all this stuff, and they haven't given her anything yet. So now she sent out a third request, and they're just not doing that. So the question is Powell and the board, they're kind of hiding like this really extensive trading going on. I mean, has it been something really, really extensive? Because if it has, then that that could be pretty significant in terms of public trust in what they're doing, all this other stuff, right? Which, if I ask you guys, you're probably like, oh yeah, they're all a bunch of thieves anyway. So I don't think it would affect you anyway, but just people in general. But along with that, what's his name? The vice chair there, Clarita. I think he was about 2 weeks from where his term on the board, it was set to end, right? And so it looks like that he's going to resign on Friday because of his involvement in the trading and whatever that went on. But I'm thinking there's a lot more probably going on. This has not been good for Powell. I'll tell you what. You got, inflation running away, which a lot of that is just stuff that Powell can't control. But he's going to get blamed for anyway because, the Fed board is tasked with that whole inflationary thing, regardless of whether it's inflation, induced by money or not. And then, of course, the dual mandate, which is also the unemployment. So, how do you manage the money and the employment at the same time? You're always going to overshoot and undershoot as you're doing it. But that trading that I'm going to call it a scandal, man. It's a lot of bad actors. You can't, when you're in that position where what the Fed's going to do before it does it, because you're on the board, right? Or you're on there with all that, and you're over there using that information to trade based on, that's just BS, man. So I think there's probably a lot more significance going in there, and we might see some fallout from that down the board as well. So should be interesting, right? The wash sale rule doesn't apply to crypto right now. It doesn't apply to crypto at the moment. So yeah, it doesn't matter if you buy and then if you sell and then immediately buy on the same exchange or another exchange. It doesn't actually apply to crypto at the moment. It does apply to stocks. You got to wait that 30 days for that. So, but yeah. The wash sale stuff the wash sale rule does not apply to crypto at the moment. This is all here in the U.S. So yeah, that's that. But as there's more regulation coming in and whatnot, we'll probably get to that point. I've talked about that before. You've been around a long time with me. I've talked about that before, where we're probably going to get to that point where it's going to be part of it. Crypto's going to have to abide by the same rules as stocks, more or less. But for now, no, there's no wash rule on that. Yeah. Oh, so looking at 2024 is when the new laws get put into effect, where basically crypto's more or less considered a security, at least from the point of the brokers, in that they have to then provide you all that tax information and whatnot that they're not providing at the moment, which is why we then talked about TaxBit. But that'll kick in 2024. That was passed with that, what was that act? In the last few months, last year. I can't remember it, but it was the one that was added there, underneath it as well, in with it. So, regulation, man. Gotta love it, right? Let's see here. Anthony Pomp deleted a tweet yesterday about how only 3 hedge funds outperformed the S&P last year, but 30 plus senators did. Yeah, that's about right. And that's the funny thing, especially with Congress. That's the gig, man. If you don't care how you get rich, then that's the place to do it. The odds that you're ever going to jail are so low. And, senators and congressmen over there are always dealing with all that insider information, whether it be from laws that they're discussing and they're getting backing for, with their corporate suitors that come in. They always have so much insider information. It's just craziness. Like I said, if you don't care how you get rich, Congress is the way to do it. And then you get for the the privilege of getting rich in such a way, when you retire, you get all those extra benefits as well. Which, if you don't know, you should look them up sometime. It's pretty great. Tito, what's up, man? Good to see you checking in there. Droid Doctor, hello there. Blaze says Pelosi was said to be inside trading as well. Yeah, I mean, it's everybody, man. It is what it is. It's the nature of power, right? You're going to use those things that you have access to, not because you're a bad person, but because just human beings in general are lazy, and it's about getting, it's about removing pain, or adding pleasure, in the easiest way possible. Many times people don't do things because it necessarily hurts somebody else. It's just sometimes things end up hurting other people in the process. It wasn't the goal. It's, collateral damage, I guess you could say. It's just part of being human. It's a hard thing, and I don't know. Anytime you've got power, if you're in that position of power, it's so easy to do there, right? Hey there, Diego. Good to see you, man. Let me see here. So that's the tax thing there. That's, what's his name? Powell and the Fed. Let me see here. Let me see what else I can do here. Let me see. Well, you've got Jeff Gunlock. I can even say his name here. He's that billionaire bond king guy. So he's saying, hey, recession's here. Says Bitcoin's hugely overvalued. Warns against investing in China. And you know what? Here's the thing, guys. As much as you may not want to hear some of those things, especially the crypto part of it, Bitcoin, the reality of it is, this is something I keep trying to tell you guys. I'm not just blindly bullish or anything. I'm taking this, step by step as we go along here. But if things continue on the path they're going, it's hard to imagine anything, Bitcoin or otherwise, really continuing higher. So we've got potentially, we've got a lot of the Fed members there kind of looking at that March area as the first interest rate hike. And I keep telling you guys, the dollar, interest rates, these things are the important drivers of what's going on in the markets. And so, if the interest rates, rise there in March, I mean, that's not any insignificant thing. And I think you have to, you have to be understanding of that. You have to be prepared for that, because I think too many people are still, just blindly bullish in crypto. And here's my concern with crypto. And then we'll go look at Bitcoin, okay? So crypto right now, things I've talked about over this last year, right? So we've got the one thing, sentiment-wise, there's things that are really bothering me. So the one thing is these people like, who are all these people now? All these music and musicians and athletes and movie stars and whatever, all kind of getting into crypto and being really boisterous about it, right? This really kind of concerns me because this is the kind of thing you get as you get toward the top like that, right? They're finally jumping in. They're making a lot of noise about it. Retail gets hyped up and keeps pouring money in. That's the time when, the bigger players start selling because they've got all that buying power. You guys, when you get into a trade, you try and ride that to the very top, right? But you should be just trying to ride it part of the way and getting out while it's still liquid, because it's not very liquid at the top, right? Many times, you'll hit that top, you have that strong supply come in, it'll drop down, and so, and you definitely don't want to be buying at the top, right? So we've got that going on. I've made mention of, what is it? FTX and crypto.com. They're the only two I know of right now that I can think of right off my top of my head, but they're getting the naming rights on those, down in Miami, and I think it was LA on the sports venues. They've got Super Bowl ads that are going to be coming out. Again, all this kind of stuff getting on. There was some with baseball too. What was the one with baseball? Maybe that was, FTX. That was FTX, I think, with baseball as well. You're getting all this jumping up there, spending all this money out there. I don't know. When I look at that, to me, being in the market as long as I have, those are sentiment things that really kind of stick out. Because we've rallied up from, 3,100 with Bitcoin, right up to 69,000. And it's here toward this top, this 50 to 60,000 area, that we're starting to see all this. I mean, that's a long way up. That's basically 20 times your money from the lows. And now all of a sudden we're starting to see all this. So, again, the stuff coming in at the top. And you say, oh, but these are big guys, and so we're the big guys, it's good. Well, no, because like I said, guys, when I talked about, for instance, the stock market, when you get to the top of like a major, when you start getting to the top of a major bull run, everybody, including the big guys, are all ostensibly long, right? And then it turns, right? And so, the smaller pullbacks and whatever, usually you have the little guys, retail, jumping into the top, bigger guys kind of selling into them, doing whatever. But when you get to a major top, often you've got everybody long. Everybody wants to be long, for all intents and purposes. And so that becomes an interesting thing there, because then retail gets in and they go, oh, look, but they're long, so that's a good thing. Who was it that, what was that billionaire's name that, that's got like half his net worth in Bitcoin now, they said. And I think the other half is like in Amazon or something. Oh, what is his name? I think you guys might have seen this, That's kind of scary with that, right? You can look at MicroStrategy, which, I've talked about that, in Michael Saylor there and what's going on with all that. They are the biggest, I think they're the biggest by far crypto holder, corporate crypto holder. And so there's a lot going on there. We can look at 2024 as the next halving, right? So that's just about year and a half, sometime in 2024. So 2.5 years or so, 2 years, somewhere right around there for halving. So based on previous cycles, we should be at a top or pretty near to it. So, there's a lot of stuff that goes in there that say, well, maybe we're coming down. And again, all of this goes around that whole idea of what's going on with the Fed. If the Fed follows through, and they're done with tapering by March, and then they've got that first interest rate hike in March, I mean, I'm going to tell you guys, there isn't really anywhere you can go that's going to kind of save you from the downside, except for the dollar. So I think we're really at this kind of precipice, right? This real kind of significant area that either we need to go ahead and break out and continue up, or we're probably heading down. And that's just not just with crypto. I mean, that's everything kind of. We're looking at stocks. We'll take a look at them here in just a bit as well. And, they're all kind of coming down as well, potentially topped out. There's a lot going on in there, And even though we had all this supposed inflation, Bitcoin, I mean, not Bitcoin, but gold and silver and whatever really haven't done anything, right? They've dropped, and they're supposed to be hedges against inflation, right? So a lot of interesting stuff going on right now, right? Bill Miller, is that who it was? Yeah. That was the billionaire guy. He's got like supposedly half his net worth in Bitcoin right now. So yeah, right? If stocks get oppressed because of the rate hikes, does that automatically assume for Bitcoin crypto as well? Do you think crypto would move contrary to the stock market? No, I think they're all moving in relation to risk. Again, guys, I don't buy this line that Bitcoin's moving because of the stock market. It's Bitcoin and the stock market are moving because of risk. Now, each market is a little bit different, but nonetheless, if risk continues to be risk off at greater degrees, you would see legacy markets like stocks come down, but then you're going to at some point see crypto go down as well. I think crypto's got a little bit more behind it just because it's newer and fancier and hotter and making a lot more money, so people are still going to kind of continue to put into it. But it all comes down, guys, when we go risk off, when people get scared, you don't keep putting money in the grand scheme of things into risky assets. You go to protect your wealth. And so, yeah. What do I think about transportation companies in terms of stock crash deflation scenario? Company dealing in rail transport of goods and people, one of the largest in Europe. Yeah. So I mean, here's the thing, guys. Transportation companies are going to be out there, still going to be needed, whatnot. But if we get to the point where we have this deflationary spiral, we go into a depression. I mean, as you're getting into that, there's less and less demand for goods, which means less and less demand for transportation services, which means even transportation companies should take a hit, right? Again, guys, in a depression or a recession or something like that, people still need healthcare. So you're going to want to look at your healthcare companies if you're looking for a place to put your money, right? I would look at municipalities, especially their electric and whatnot, because people still need those things, right? You look at what do people still need, even with, consumer staples, stuff like that. You'll probably see increased spending on defense, which is what usually happens when things tick down. So, those would be the place, defense companies. Those would be places where, you'd see money probably going. Everything more or less should take a hit at first. And then, again, you have that other bit kind of taking out of it there while the rest of it goes down, right? So, yeah. Let me kind of catch up with you guys here. Yeah, Bernie is loaded. Come I catch here? Aren't we about 40% from the previous top? Right now we are about, I don't know that it's 40%. I guess it is about 40%. Yeah. 40% off that. Yeah. Coming off there. So we'll talk about this in a minute. Let's go ahead and look at some charts here. So here's the thing. So we've got this range here. The price action and volume suggests some kind of accumulation going on in here. And then we got this big move down here. So like this spring or this terminal shakeout. And then we're getting to a higher high here. So it tells me that this area is likely accumulation. Now, if the bottom is in, we're headed up, right? So the first thing we wanted to do was get above wave 4 here. So if the black count is correct, then we've broken out above wave 4 and we should be heading up. So our next goal is going to be getting above this 1 and 4 hour pivot right here and this descending red resistance. The bigger clue will be getting through the descending channel resistance, which will create a pattern target of $17,609 above the point of breakout, as well as the daily pivot right here at 49,263, and ultimately above wave X resistance up here at 52,100. So that's kind of the things we watch as this continues to rally, right? But here's the thing. It is possible. This is something I talked about. I think I just talked about it with Discord. I don't think I talked about it with y'all. But during like the video updates that I do, I mentioned the fact that it is possible, because we were doing so much sideways here, that wave 4 may be printing, we were getting like these higher highs and lower lows, that they might be printing this this rare pattern, this inverted symmetrical triangle, or what we call a megaphone pattern, right? So usually your symmetrical triangle looks like that, right? So, and that's pretty common. Now your inverted symmetrical triangle looks just the opposite. Instead of getting lower highs and higher lows, it gets higher highs and lower lows. Same principle of what's going on here, though. But it's much more rare, and it looks like it looks like a megaphone, right? Looks like a megaphone here, so we call it a megaphone pattern. But that may be in play, and if it is, then we're doing wave E, and has a likely target of this H4 pivot area here. So what I want to see right here is, do we break out impulsively above the pivot and then stay above it? We might break out above it, come back, retest as support, and then push out higher. And that would be a good clue that this black count's correct. We're bottomed here and we're heading up. If, however, we get rejected in this area and we start coming back down, well, then that potentially completes this idea that wave 4 is just printing this inverted this megaphone pattern, inverted symmetrical triangle. And then we'd still be looking forward to get down here around. Initially, the target is this 4 hour, 1 hour S1 pivot right around 39,070 or 39,080 up to the daily S1 pivot at 39,320. So that range there, or the EQ of this demand structure here around 38,580, 38,590 kind of area. So if we come on down, those would be the two places I'd look for just to finish up. And in that case, what I think we'd be, so if we look at this in terms of Wyckoff, we've got basically our selling climax right here, where I have is this wave circle A here. And then we came up to here, which gave us that automatic rally. We pulled back. ST and phase B had dipped just below the range low here. And then we rallied up. And then we came down hard here on this big volume, right? And then we went up, show of strength it looks like here. It came back, retested that range low there into this range here. Much lower volume, which is what you want to see. And so we're pushing up here. But if it comes back down, what I think we might see is something similar to this, maybe even on more volume as we break down below and then rally right back up. And that would be a terminal shakeout. One last push down there to flush everybody out and then rally the heck back up. That said, here's the thing. We've got this large candle spread and this large volume right here. So if we can see this continuing up from here, that seems to suggest that we might have this right here. And so then this candle would be your jump across the creek. And we'd rally up, we'd pull back up the edge of the creek, and then we'd rally back up. If the black count's correct and wave 2 is complete here and we're heading up. So those are kind of the options we're sitting at looking at right here. So we could still see this come on down to this area here and then, as maybe like a terminal shakeout locally here and then rally back up. Or we see it continuing up here, in which case this is already correct as it is. 4 is done and we're heading up. So if we are heading up, again, the, H1, H4 pivot here, descending red resistance, descending channel resistance, daily pivot, and then wave X at 52,100. Those are the targets you look to trade along the way. And going through each one gives you greater confidence that that bottom may actually be in. And that way you don't necessarily have to wait until this up here, wait for this to go $10,000 before you jump in. But, until we break out above that wave X, it's still possible we can head lower. That's our confirmation on the count here on that 1, 2. That's our confirmation point. Okay. So yeah. Let me see here. So this is kind of what I'm looking at the moment here. So now we're going to do the dirty deed nobody wants to do, right? So if we look at the possibility that maybe this is 1, 2, 3, 4, 5. It's just a short 5. So we're done 3, 4, and we're done with 5, right? And this is the top of the market, 69,000. And now we've started the bear market, right? If we have, there's some ways we can look at this, okay? So the first thing you have to remember is if you're at the top, you're going to get a chance to revisit that top-ish area. Because your first wave down, your second wave pullback, right? And your second wave is usually going to go that 61.8, 78.6 kind of area, right? Now we can count, this is kind of a clear count here, right? As, excuse me, as like a ABC is 1, 2, ABC 3, 4, ABC 5, right? No, and even though their ABCs here is a leading diagonal, we don't have wave 4 breaking out into wave 1. So that's kind of questionable, right? Because usually that's what you are looking for. But we can maybe get a 1, 2 here, and then a 3, 4, and then a 1, 2, 3, 4, 5, and get 5. Now, the thing about this count is that wave 3 is only going to be, I think, 1.14. Not even. Look at that. That wave 3 just goes below that 1.0. So I'm not a big fan of that count. Really not too much of a big fan of that count because that wave 3 would be so short here. So my bias is still to the long side overall. But we'll see what goes on here. Let's say this is just some short kind of wave 1 here, right? Well, if it is, then you're rallying up here. I mean, you're looking for probably a breakout at least to 57,788, if not 62,719. Your pattern target based on the height of this channel here, again, is that 17,609 above the point of breakout. That's potentially getting you up here at 78.6. So here's the thing. Even if this is 5 waves up and done, and this is the first wave down on the, in the bear market, right? You still have this move up here toward that 60,000 plus level to potentially get out. So yeah, I think, we kind of see, okay, well, I want to see what happens here locally. If we're breaking out of this descending channel resistance and, and the daily pivot here, that starts looking pretty bullish because we moved in sideways between the pivot and the S1 on the daily, came down to the S1, rallying back up above that pivot, especially above that wave 4 swing high there, or which would be wave X on this other count here, right? That would be this wave X right here. So that would be significant. That would be quite a bullish move. Everything else aside, if we take everything else, just trading pivots, guys, this move right here into here, if it rallies off the S1 and breaks back out above that swing high, which is above the daily pivot there, we would generally consider that very bullish, and we would expect price to continue rising to a new all-time high just off that move alone. Because that's usually the setup. That's what we look for. So, we've still got this set up there. Now on the daily here, I mean, this looks good. I mean, this is a sexy daily candle down here at the end. You got this long lower wick here. You've got the it's a doji. We're getting this bullish engulfing now, and the higher this closes today, the more bullish that looks, right? You can see that locally here we've got bullish divergence between the lows on the 7th of January and the 10th of January here. Higher lows, lower lows here. And like I said, we took out just this recent swing high here. We took that out. We just popped up above that. So especially if we can close above, that's a good thing. We've got a lot of room here on the daily RSI and Stochh RSI. So there's a lot of positive, a lot of positive possibilities setting up here. But there's absolutely nothing here that says we're definitely going up. Again, guys, nothing says definitely anything, right, in trading. But, in the big picture for the daily, what we're looking for now is a breakout above this swing high. What we normally look at is a breakout above the pivot, but because this swing high is right here by the pivot, we want to break out above that 52,100. Because that then sets, okay, well now here's the bottom here. This area right here, which we were using as resistance and support here. You see how we go across on this? See how that works as support, resistance? So to break out above that is a significant move. It's a significant area of support and resistance there that we would get back above. So, that's what we kind of want to look for in the big picture. But, I mean, if you need a bearish look, this is the idea, is that maybe we've got 5 down. And if we do, and even if this is bearish and this is just one of A, we should still rally back up here 60,000 or higher on wave 2 before continuing lower. So yeah. Let's see here. Kimozabi says, I have this as a double zigzag, currently repeating the top waves down, top 5 waves down, and elongated running flat in the middle. Target the monthly or 2-week. Over there. Okay. Yeah, I mean, so, we'll see how this plays out. There are, because, there's different ways to kind of count it as it comes down here, right? And of course, if you've got it as a double zigzag, then you're looking at, it's just a pullback, right? Again, one of the things that is important to notice or to note is where we are really, right? So where we are, we're right here in this area of support. We had it here back in the beginning of the year. We had it over here back in early summer. We had it over here midsummer. We have it over here early fall. And, then we dipped here in December and again here. So, I mean, this is a significant area. It's the S1 pivot on the daily too. So, there's a lot of support for if this is just a pullback that we rally from here on out. Doesn't mean we have to, But the significance of this area is not seen again until we get down here. So this would be a great bet for the rally back up, right? So that's what we're going to look for. We'll see if we can get it. Again, locally, price is doing good. But even if it's going to go up overall, again, we still might see that one more move down. We've broken out above the previous wave 4 here. So, purple wave C. There's D. And so, again, maybe this pattern is playing out. But if we can get an impulsive breakout above that 1 and 4 hour pivot there and then have price remain above it, we don't just want it to break out and then turn right around and come back. It needs to stay above it. That'll signal that the purple count, the alternate purple count, probably isn't playing out. And of course, the closer we get to the R1 pivot, much less likely, It should, again, if this is that megaphone pattern, it should end between where the swing high is right now and kind of this descending red resistance right in that area should be. It shouldn't go any further than that if that's in play. Let's see here. Poke, what's up? Says, I'm hoping for a green candle in the weekly closing. Man, weekly just started, though. What are you looking at? Let me see here. Oh, let me see. This one right here? Yeah, I mean, that would be huge. If this weekly were to close back up here and engulf this candle here, that would be huge. That would be huge. You can't guarantee that would be the bottom, but man, that would go a long way toward saying that it potentially is. See, we do have this S1 pivot down here on the weekly. So again, I talked about this before. If we ended up coming down to this low here, down around this 30,000 area, I think we'd get pretty close to this mid-20s area here at the S1 pivot and then rally back up if we were to get down there. I don't know. I mean, it could potentially hold here, but I think we'd get a nice wick down toward that S1 pivot and then rally up. I think might be what would happen. But yeah, on the weekly pivot here, this is another way to look at it. So you've got your weekly pivot right here at 47,634, and you've got the swing high. Again, that's at 52,100. So again, rallying back up above that 52,100, that wave X on this, this pullback wave 2 idea, that would be significantly bullish. On the weekly, it would be significantly bullish. And the larger those weekly candles to accomplish that, the more bullish it would be. So, yeah, if you want to watch that weekly, I would definitely watch to see if we get a rally from here. I think if we break down, again, might end up closer to this area here, other than just that quick dip that I was talking about. If we continue down well below that, might end up down here at that 30 area. But I think if we get there, then we probably got to wick down to 25 and rally back up there. So, yeah. Let me see here. Let me see here. Oscar says S2 weekly on 7,000 as soon as Hayes enters the courtroom in March. Looking down here, around there. What is that? 6,300. You can't say no. I mean, crypto's all about fear, right? Because crypto's made up of so many amateur traders, right? Man, oh man, what a buying opportunity that would be, though, right? Gosh, what a buying opportunity that would be. I don't know that I see that happening, but man, if it did, depending on the path it took down here, I mean, I would, unless the path coming down suggests that maybe crypto's broken, it's done. I mean, not looking at a buy, but man, otherwise, if that path down looks good, man, there's your buy right there. And then looking at another all-time high, I mean, huge, move back up there, make good amount of money. Again, I talked about the halving is in 2024, right? So again, you got to pull down, you got to have your bear market in the rally back up till that halving, right? So, do we get that kind of pull? We've always had a huge pullback in that bear market. That doesn't mean we have to now, though, guys. Again, I talked to you before this bull market ever started. I talked about the impact that having the bigger money would mean, right? Some of the things that are going on, and how crypto becomes a part of their larger wealth plans and goals, right? Which means it has a lot to do with things that you guys don't normally, up until recently maybe have thought about, which are, interest rates and value of the dollar and risk on and risk off assets and things like that. I still see people littering social media with the idea that, oh, Bitcoin's going to go up or down because it's correlated to the stock market, because the stock market's doing it. I mean, completely, has a lack of understanding of why either one of them would be doing it, right? So I think there's a lot of potential issue with that. Because people still think, oh, Bitcoin would just go up or go down just because the stock market's going up or down. But it's not that it's because of that. It's because they're both reacting to risk on or risk off ideas in the overall markets, in the economy, really, is what it is. And so, again, that's where this whole idea of what's going on with the Fed really steps up. Now, the ECB, I think, is going to be, the 21st? Their inflation soared higher. I think it was like 5% or something. We were talking about that they were interested in raising interest rates Q1 of next year. But I talked about the fact that they would, as long as inflation, it's hard to believe that they wouldn't raise it. But we might see it earlier. We'll have to listen to what they say here when they do have that time coming in. But you want to definitely pay attention to it. And a lot of it, not just because, hey, I know a lot of you guys live over there in the EU area, but also because of what the euro-dollar pair means to the DXY. So, and if the ECB starts talking about, raising interest rates and whatever, then, that's going to give some strength to just the way that the dollar gains strength from the Fed talking about raising those interest rates, right? Let me see here. Oh, y'all in the haze thing, man. But again, guys, that's what trading's all about. I think unfortunately, a lot of the problem with amateur traders, new traders coming in, is that they concentrate so much on this idea that somebody's manipulating them and whatever, that they never take the time to really understand what's going on, so that it doesn't matter. I mean, whether that's your mindset or not, if that's your mindset, well, you're not going to change that they are. So you need to understand what they're doing so you can, make sure that you're not a part of that, right? But again, and I think it's the same thing we see in life, right? You see people all the time, maybe your friends, maybe you even, you talk about things that the government's, how they're screwing you, how they're doing all this, right? Rather than saying, well, there's obviously nothing you can do yourself to stop that. So why not figure out how to, protect yourself most from it, or how to proactively increase your wealth as a result, right? Figure out whatever in your life, guys, whether it's trading or anything else, figure out what the game is and figure out what the rules are, and then play by the rules. It doesn't matter if it's rigged against you. If you understand the rules, then you can play logically, and you can still come out way ahead. It's when you sit there and you just whine about it constantly and oh my God, it's so terrible and life's so terrible and they're screwing me and whatever. I mean, it doesn't do it. You guys, you have to understand, right, wrong, or otherwise, that's happening. It doesn't do you any good to complain about it. It does nothing. You continue to get fleeced. But if you figure out, okay, well, here's the game. If you pay more attention to, if you get off the, oh, I'm getting screwed, and you get onto the, okay, what's the game? How is it played? Then by doing that, understanding that, and moving appropriately within those rules, you don't have to worry about the, oh, they're screwing me. Because you're not allowing it. You understand what's going on. You're playing along with them, with an understanding. I think that's the problem that we get a lot with things. Just people in general. People like to complain. They don't like to figure things out. I'm going to tell you what, guys. Every so often I talk to you about, even though I don't work for anybody else. But, there's a lot of significance. I've hired people on and off. And, as somebody who hires you companies or people, they don't want somebody who complains. They want somebody that says, here's the problem, here's the solution. You know, they sit there and go, okay, well, this is what's going on. This is how we can deal with it. Because they understand a lot of times it's most times it's stuff that you can't control. But that's so, you know, clear with markets. You can't control the market, guy. Even the big guys by themselves cannot control the market. I've talked about that so many times before. If the market is bullish and you dump on the market, it may just get a small pullback locally, but it's going to continue being bullish. You can't do something opposite of the market and expect the market to change on you. If the market is bearish, though, or is on those bearish tendencies, and you dump on it, well, it's already there. It's already feeling bearish as it is, so you're just going to go on with what's already going on. But, you know, this idea that the big players out there are just deciding exactly when and how the market's going to move, it's not how it works, guys. And that's why we always talk about tests and secondary tests and springs and upthrust and upthrust after distribution and stuff like that, because it's all an acknowledgement that the larger players are constantly testing the market to see if it's ready to move or not, because they're not going to toss in a lot if it's not ready to move. They're going to keep that range going, hopefully convince you to sell or to buy into a position where the market's ready to move. Okay. Let me see here. What is happening? What's up, man? Good to see you checking in there. Jared the Great says, if 69,000 is the top, what are your thoughts on the tamer bull market? No blow off top leads to a tamer bear market idea. I think that's a possible idea. You know, if you don't have all that significance going into the top, then you won't have that significance that you would get, you know, because you've got all that money flowing into the top and you got the hard supply coming in, and then people are done buying, and so it crashes back down, right? There's no support. But if you're just kind of easing it at the top, I mean, it's still going to come down. You know, I mean, my thought is if we were to hit a bear market, I think we're minimally coming down probably. I mean, we're coming at least to, you know, the previous all-time high, that 19.5 kind of area. But I think we might actually see it, you know, could see it coming down here 11.5. There's a lot of support in this area and right all below it here. I think if it dips down below that, you know, then we look down here in that 3,000 to 4,000 area. Not saying it has to go there or that it will, but I'm just saying that if we're coming down, those are kind of the main areas I'm looking at as it comes down there. I don't know. The idea of a bear market just going sideways here between 30 and 60, it doesn't seem like much of a bear market, you know? But I don't know. Maybe, I don't know. In that situation, maybe two halvings equal the full bear or the full bull. So this area leading in there, I think Hank's looking at sideways in that same area. I think maybe that all becomes just one elongated bull market. And so we just go sideways. We just wash sideways as like midway through that long double halving bull market kind of thing going on. But I think a lot of that's going to be determined by what exactly happens. Do we get into March with, you know, 75, 80, 85% of the board there looking at, you know, anticipating an interest rate hike? You know, because if we do that, I don't think Powell doesn't hike, you know. I think it would be really weird if he didn't hike, if we went in there with that kind of 75%, 80%, 85%. Kind of thinking that that's what's going to happen. So I think I think March is really where it plays out, guys. At least to begin with. We're going to have to see how this talk goes. What's going on with the Fed right now is the biggest determinant, I think, of what happens with the markets in general going on there. Right now we've got pullback because, again, we've got that assumption that we're going to get that interest rate hike in March, 3 by the end of the year. But, crypto is that other market. It's that one where people tend to be more bullish in general. It's newer, it's fancier, it's a shiny object. There's so much so that even, again, your big people like Bill Miller and whatnot are, investing quite a bit in it. I think the bigger question on something like that is what happens, I continue to say this, what happens to MicroStrategy if we got something where there was some kind of prolonged bear market that took us down to 20 or lower? Because at 20, everything they bought, they're underwater with everything at that point. And so, of course, their stock price is going to slump like a mother. Because it would normally slump just because, the stock market itself is going down if Bitcoin's going down as well. But then on top of that, because it's so heavily invested, what are they, like 5 billion, 6 billion now in crypto, I think? December, I think they filed with the SEC that they bought another 92 and a half million in Bitcoin. So, yeah. I think there's a lot more going on there than most people are going to want to handle. What's sad is, I think, again, this is something you talked about last bear market, that this bull cycle would be when institutions and everybody really kind of start getting in. And it would really be sad to see a strong flush out on that scares retail into thinking it's over and done with. And then, the golden era of Bitcoin basically begins. And then the retail misses out on it. And, and it coincides with some kind of recession or depression where people have to get out of crypto because they need money to pay their bills, or to try and protect their wealth because it's dropping so hard. I mean, these are all realities of being in markets, guys. Don't think it can't happen. I'm not saying it's definitely going to happen, but I'm saying that if you don't understand that that's a very strong possibility, then you're not doing this right. The problem is you've got so many Bitcoin and crypto cheerleaders out there right now who fail to acknowledge that possibility. And even of those that do, they have so much wealth that, they're not you, those of you that maybe are coming in because you're hoping to make wealth in here. You're doing the 9 to 5, you're paycheck to paycheck, Omicron sucked for you kind of thing, right? Omicron, but the whole thing, pandemic and whatever, as far as, job stability and all that kind of stuff. So there's a lot in there. People tend to idolize big names, right? So you think about sports, you think about music, you think about like that, right? And so then they come on here and they get on TV and they go and they back all these things, right? They go and make a commercial about some product and you go, oh, I need to buy that product because that person talked about it, right? And that's essentially what we do. That's marketing right there. That's the same way in crypto. You see the big account with 100,000, 500,000, 1 million followers, and you go, oh, they must know what they're talking about. I need to follow them. And then you find out, well, maybe that wasn't such the right thing to do. If you're lucky, you figure that out. A lot of people never figure that out. So, yeah. Let me see here. I am sorry, I can't even begin to pronounce your name there. CHOUNOURYOKUSHA. He says, I can't see Bitcoin break below 30,000 ever unless there's a really bad recession. Well, 30,000 isn't such a, it's definitely some strength there, but again, there's a lot more support in this area right here. You have multiple touches in the, over multiple years at that, 11,000, 12,000 area than you do right here. But there's still strong support here. Yeah, again, I wouldn't be surprised to see a drop below 30. But right now, again, like I said, if we get that drop below 30, below this swing low here, I think it'll just be a wick that pops down there and heads back up. But on something like that, if we had that drop below there, if it's not a bear market starting down, this would have to be a flat. It would have to be ABC, ABC, and then 5 down. Again, that's not my primary because, again, you have to look at a truncation and this kind of stuff to do that. But as I've said, it's still a possibility. But even if that, it just means, okay, well, here's 3, here's 4, and we've got 5 still going up, right? And in that case, something like that. Let's see. Would have a minimum wave 5 up there around that 104, 159 area I've already got there, 105,000 kind of area. Minimum wave 5, if that were to happen there. So, I mean, you know, again, looking at it, there's possibilities there. I'm never a fan of using the terms never and always because, you know, again, nothing ever always or never does something, right? So I'm real hesitant to use terms like that. But like you said you can't say do it unless there's some sort of really bad recession. And of course, we're looking at the idea that maybe we're going to have some kind of depression coming, right? Let me see here. Well, I appreciate you, Brian. Thank you, man. You know, again, guys, thankfully, I don't have to, you know, rely on being an influencer or something in order to pay my bills. So I think that gives me the freedom to be more honest with you guys. But, you know, that's also just me. Man, you know, I can't imagine purposely knowing that I'm going to say something that isn't true just to get you to do something. I don't know, man. That just really bothers me. I know some people it doesn't. It is what it is. But, man, for me, it just... I don't know. That's real sketchy. Let me go ahead and look at some other things here, guys. Let's see here. DXY, what's going on? So I was looking at maybe an ABC for W, X, then ABC for Y here. At this point, we've got 1, 2, 3, 4, maybe 5 looking here. So maybe we've got a flat correction. So A, B, and then 1, 2, 3, 4, 5. So what I'm going to do with this here real quick is I'm going to change this a bit. So we'll have this here. And again, this will look like a possible A, B, C kind of thing here. Now, here's the thing. This will have to... it has to reverse prior to the to this wave C swing low here at 95,570. So it's trying to rally right here. So if it rallies from here back up, then you know, back above this swing high right here around the R1 pivot on the 4 hour, that should signal then we're heading back up here, potentially toward this R2 pivot up here. And then wavy, maybe pulling back toward this 4 hour pivot, maybe a little bit above that R1 pivot, and then rallying up for wave 5 of 3 there. If we break down below here, I'll have to figure out what else is going on. But as far as the daily goes, we're just about to dip back into oversold here on Stochk RSI. RSI is about just, what are they at here? Oh, they're just barely neutral here right now. So we'll have to see if we can get that that breakout there as we continue to look at that. So that's what I'm kind of looking at there. All right, Crypto Girl, have a great day. Let me see here. I don't know. We'll see what happens, Hank, heading to the mid-80s. I mean, we can't say it definitely won't go, you know. I mean, it's done a lot of work. You know, here's the thing. It's done a lot of work. It's gotten, you know, quite a rally out of the last year. Let me find my other... oh, where's my other DXY chart? There we go. So, you know, still kind of looking at this bigger picture here. So the idea that we've maybe still got this triangle going here, we get that breakout, we've got the this complex double head, inverse head and shoulders target up there at around 98.74. We have that blue swing target. I don't know why it's gone from, let me see, is it on the daily maybe? Oh, there it is. Yeah. Right there at 97,770. So, I mean, still some possibility there. And you can notice, look at this right here. In terms of this range, look at what we're doing here. We broke out above that EQ of the range, and right now we're finding support on it at the moment. So, I mean, in the grand big picture there, if we can get this breakout above the swing high here, you know, obviously that looks a lot more bullish coming off that. So we'll see what continues to happen in this area, sitting right here below the daily pivot, but on top of the large range EQ right there. You know, again, all these swing lows right in that area. So we'll see if we can get a nice, big, strong. And you would expect a nice, strong rally. After all this consolidation in this area, you'd expect a strong rally on that breakout, which, again, kind of adds to the idea that maybe there is that triangle going on there before it breaks out. So, yeah. Let me see here. Somebody wanted to look at TSLA. Oh, man, I am over today. I talked a lot to you guys about, you know, just the more important stuff. TSLA, I think we've got at least an AB, potentially a 1-2 here. Again, we've got 5 waves down. I talked about this last week. Leading diagonal here. Got an ABC up. And then we got 1, 2, 3, 4, 5. So it looks like one of, whether it's C or 3 coming down here. One of 3, whatever it is. The pullback right now, we're just now hitting that 4-hour pivot there. This thing is backwards. Let me see here. Hit that reverse. There we go. So we're right there around the 38.2 to 50% retracement area. If it breaks out above that 50% around 1,096, then maybe we'll look up here around the R1 pivot, which puts us right into this January 5th supply wick up here. Right at the R1 pivot, right there between the 70.5 to 78.6 retracement. So yeah, I'll look for either rejection here or I'll look for a rejection of the R1 and then look for it to head further down. Let's see here. Yeah, if we can hit that 50%, that'll give us a 727.5 target. If we can hit the 78.6 right there above the R1, that'll give us a 794.5 target right there above that high volume node. So that's a good place. And the 2.0, the wave 5 would be down here around that 707 area. But either way, it does look like in the grand picture here that we've got a wave down and a corrective wave up, which means at least one more 5-wave move down if it's an ABC. If it's a much larger correction, then further on that. But, you know, in line with that, we can look at ARC. And there we go, guys. So again, talked about this being marked down here, coming out of here with a potential target of this area down here. And that's what it looks like we've got. If I look at this as a count, this looks like a triangle right here. So A, B, C, D, E. And then 1, 2, 3, 4, 5. So this would be 4. This would be 3. And you got this little 1, 2 here. So it might be like a 1, 2. So there's 1, and then 1, 2, 3, 4, 5. So there's 1, 2, 3, 4 is a triangle, 5 here coming down. Let me see. And then again with here, it looks like we've got a 1, 2, 3, 4, 5. So 1, 2, 3. Probably a triangle 4 here as well, 5. So A, B, C, D, E, 5. And then A, B, C up. And then 1. Which one's higher here? Let me see. 126.32. 126.25. 124. So this would be the high here. So it'd be a 1, 1, 2, and then this is 1, 2, 3, 4, 5. So 1, 2. I'm not sure about this count here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. See, it'd be like a 1, 2. 1, 2. And then this might be a 1, 2 here. So 1, 2, 3, 4, 5 gives us a 1, 2, 3, 4, 5. So further down overall, maybe we do have some bullish divergence on the daily here. You can see the volume's picked up a bit in this area. Right now, I'm just expecting this to be a not a bottom, but a correction right now before further breakdown. So as a correction, initial area of target is, I think I talked about this before last week when I talked about likely targeting this area here. Then the pullback is likely to target this kind of descending channel EQ in this daily pivot area right here before potentially heading further down. Yeah. Silver looking like a good short soon. Yeah. Hey, what's going on, Chris Baker? Glad to see you checking in, man. Let me see here. So if we look at silver, let me kind of pull that up. Oh, let's see here. Well, what do we got here real quick on the... Here's what I've got for the S&P E-minis. So I've got us as 5 down, and then an A, maybe a B as a flat here, and possibly a C heading up here toward that 61.8 at about 47.17 right there above the 30-minute pivot. And if it continues higher than the 78.6 right here below this high volume node right here around that R1 pivot on the 30-minute. But I think it's just going to be 3 waves, corrective, and then down, because I do have a pretty easy 5 count down here. So, still looking for that right now. If we look here at silver, silver's pushing. I'll have to correct this interior count a bit here. It's pushing up a bit higher, but big picture, still kind of looking at this as a 1, 2 here. Leading diagonal 2, and then 1, 2 right here, and then locally 1, 2 maybe. If we break out above this swing high here, that would just mean 1, A, B, C. So still 2 working up on that. But big picture says wave B up here, wave C down below $10, likely below $8. So right now, just kind of looking for that. I can't even do that. Reversal there. We're hitting the daily pivot at the moment. Weekly, we're still kind of down here. Weekly, we're just in here between the pivot and the S1. So again, usually if we're coming in sideways between the pivot and the S1, we look for a target down around the S1. So we'll see what happens with that. Some things to look at here. Our rallies, our declines are on larger candle spreads that are coming one after another right here. They're not like overlapping really. You see? Our rallies are overlapping smaller candles. You see how they're going into each other? See how they're going into each other and overlapping? So, and again, large move candle here. You can note that on the rally here, volume dropped off. Let's see here. On the rally there, volume kind of rose a little bit, but more or less just average there. And then the big volume at the top as it came back down, which volume kind of dropped off there. But in terms of candle spreads alone, we're seeing the larger consecutive candle spreads coming on the way down, whereas on the way up, we're seeing smaller overlapping concurrent type candle spreads. That's the first clue that usually, again, your trend is usually those larger candle spreads that have little overlapping. Your pullbacks are usually the smaller candle spreads that are overlapping a lot more. So, in the grand scheme of things, if you want to be bullish on silver, I think you've got to get above this swing high above the pivot here at minimum. So you're going to have to see it get above 25.49 at least to even start, I think, being bullish on it. Until you do that, this is still resistance there, and of course this is resistance here. So yeah. Let me see here. What is a markdown exactly? Oh, okay. Sorry, Moogs. That's markdown just means that basically the market itself is what amateur traders usually refer to as bearish. So just that the market is going down. That's the market sentiment is further downside. In terms of Wyckoff, it just means that your consolidation is done, your range is done, your retest of that range is done. And in this case, the retest failed, and so it's coming back down. So if we look at, see, was it this? Where were we looking? Oh, we were looking at ARC, right? So like you've got this distribution here, and then it drops through the, falls through the ice right here, which is your support. Comes down, it gets rejected at that support, and so then it kind of does sideways. So this all becomes, this is distribution, this is redistribution right here. And the breakdown through that redistribution is that markdown. It just means that the trend is down, once this has been completed. So yeah, I hope that makes sense. Esteban, what's up, buddy? Good to see you here. Let me see. Kind of catch up with you guys. What else do we got here? Gold. Since we looked at silver, we can look right there at gold as well. Let's see. So, the big picture we're looking at here is that we've got this possible large triangle playing out here for about a year now, just about a year. Or this sideways for about a year, triangle, right in here for almost a year, yeah, March or so, going up. The idea that maybe wave E may be done here, but also possibly a breakout here could say that wave E is still in progress, but it should finish prior to, or it needs to finish prior to, the wave C swing higher at 1879.50. So gold getting a boost today because the DXY is getting a bit of a drop here. See how we got this drop coming on here? So that's giving gold here a bit of rally power coming on there. The RSI still kind of confirms that triangle there, the way it looks, but we need a breakdown below wave D here as the first clue that that triangle may be complete. 1762.20. Pattern target based on the height of that. If wave E is done, pattern target is down here around 1586.90. But as I talked about, this is a leading diagonal here. So you've got what amounts to wave 1, and then ABC here is a flat as 2, 3. Well, I don't know. If price stops here, then it doesn't have to be a leading diagonal because it's where does wave 4 end. It's not the height of wave 4. It's where does it end. And in a triangle, it would end here, would be below wave 1. So that pattern target would be good. If we were to rally up, though, right above this R1 pivot, that would put us into wave 1. And that would suggest that a leading diagonal is going on here. And if that's the case, then wave 5, it would be an expanding, broadening wedge, which means wave 1's the shortest, wave 3 is going to be the middle, and wave 5 needs to be longer than wave 3. So that would mean it would have to break down, below 1547.90 right now. Let me see here, more exact. That's wave 3, and we get right there above the R1 pivot. It would have to get below 1576. So still kind of that same area there. I'm going to go ahead and put that in there, move that up there. 1576.40. Because in an expanding broadening wedge, you go from shortest to longest. So wave 1's going to be shortest, wave 3 will be middle, wave 5 will be the longest. If it's a regular wedge, wave 1's going to be the longest, wave 3 is going to be the middle, wave 5 is going to be the shortest. So, if you think you have that pattern unfolding, then one way you kind of look for your targets is based on that. Or at least possible distances it might travel with that. This is not a 2-hour session yet. It's just an hour and a half. Let me see here. Ali, what's going on? It says, I checked out EWI for a few weeks. They seem to think the dollar is topping out soon and going down long term. I'm curious to know your thoughts on this, Chris. It's possible. That's why we talk about, everything's possible. But I think it's going to depend on where you're looking in EWI. I know they've got lots of different analysts. Actually, it's one of our members asked me about this just the other day. I think theirs was in regards to crypto markets, whereas one analyst believed that the top's in for crypto. Another analyst believed that, the count's similar to mine where we've got the further upside. And so that, again, has to do with whoever's analyzing at the moment. But yeah, it's possible. It's the same thing we've talked about with the dollar here. Let me talk about that real quick. It's this idea that maybe we have like an ABC or a WXY on a correction here. Because in the grand scheme of things, it has retraced now. Let's see here. Out of this full decline, it's retraced just about 50%. So Dow market theory says, 50% is the retracement. We've hit this high volume node here. So if we can break out above this high volume node, we should come back and test it. This idea that we'd break out above it, come back and test it, then continue up higher. The fact that, as I mentioned all throughout last year, your cryptos or your major currencies tend to, if they're going to reverse, they tend to do so at the beginning of the year. So this was like around January 6th, I think, of last year. We're January 11th. So, I think I mentioned this maybe even the recent week or so with you guys. The idea that maybe this could be a reversal coming in. Sure, it's possible. You had this one right here. This was February. This was March. This is December, January right here. January. So, and when you look at this May, there's a reversal right there around January here. It's already down though. But I mean, these are kind of ideas that you want to, keep in mind with it. Like I said, if this is a complex head and shoulders pattern right here, then our target's up here at 98.725. This swing right here, from this swing low to swing high, that first wave, the swing target on that from that blue range there is right there around 97.77. Again, looking like we may be doing triangle here. So even if it rallied up a bit higher, it could still be, that and done. My big point of contention with that is that we've reached the 1618 extension. So in general, if you're doing an ABC, the closer C is to the 1.0 extension of wave A, 100% extension of wave A, the more likely it is to be an ABC. When you start getting around the 1618, your bias should shift generally toward a 1, 2, 3. It doesn't mean it can't be an ABC. You can have a really long wave C there. But again, trading is all about confluences and confirmations and what normally kind of happens. And so unless it gives me a real reason to think it's heading down there, it makes more sense with the 1618 extension to stick with that going on there. I mean, if we're looking at this, 1, 2 maybe. I don't know, maybe ABC, so a W. And this would be an ABC, down would be an X. And then... and then maybe a B. But that's still 1, 2, 3, 4. It'd still be a 5 to get a C, right? So ABC is W, ABC is X, and then ABC would still be Y. So, it could still be a WXY playing out in there. Again, we just continue to place this going on here. As long as the Fed continues to be hawkish, and increasingly so toward the dollar, tapering, finishing taper sooner, raising interest rates sooner and more often. The only thing that turns this down is if the ECB really kind of kicks in there as well. So the ECB would have to get significantly more hawkish than they are now, just to kind of get to the same point that the dollar, that the Fed is at, much less to go beyond it. Because again, remember that Euro USD makes up 58% of the value, the weighted value of the DXY. So as long as the ECB continues to be, more dovish, and especially with the Fed being hawkish, it doesn't make sense that the value of the dollar would fall, because the rest of it doesn't make up enough to compensate for that. If you're looking at USD yen, USD Swissy, USD CAD, cable USD, those other pairs that make up the rest of the value as well. And so, especially if the Euro USD continues to drop and the USD yen continues to rise, together they're just about 70%. The two of them together alone are about 70% of the weighted value of the DXY. And right now that's what they're both doing. The Euro USD is heading down, USD yen's heading up. So 70%, that alone, even if the rest of it was all going down, that's significantly, that adds a significant amount of weight to that value. So value should rise then based on that. Yeah. They have it rising as WXY. Yeah, I mean that's the way you would have to, that's the way it would have to be. But like I said, again, generally, if the third wave's getting around that 1618, usually I lean toward it being a third wave. And then again, like I said, the whole thing has kind of fueled my thought on this, not only the countdown, but the idea of what's going on with the Fed and with interest rates and with all this kind of stuff. Because that's really the determinant of where the DXY is going to go with that. So if it turns down, it has to be because the ECB gets significantly more hawkish and the Fed likely becomes more dovish. So a miss in March, in other words, Powell not raising the interest rate in March would be a significant surprise. And you'd see I expected you'd see the dollar drop pretty hard on that. Now, it doesn't mean it has to continue going lower. We could rise, and finish up 5 waves up by the time that comes, and that would just be the start of wave 2 on the pullback. But nonetheless, it's something to watch. If that were to happen, I would expect the dollar to drop pretty good to begin with anyway. So, yeah. Hank says the euro is forming a nice ascending triangle bottom. Do you mean descending triangle? No, ascending triangle. Are you talking about a barrier triangle like this? Whoops. Like that? Ascending or a barrier triangle? Ali, sure thing, man, sure thing. The one thing I want you guys to understand is there is no guarantees in trading. There is no. Oh, there's no guarantee I know how to speak properly either. There are no guarantees in trading. The best we do, guys, is we work with what we have and try to get toward that, assembling more support for maybe what we think might be happening. Okay, yes, Hank, that's what you think? Oh, CPI release tomorrow too, guys. Yeah, by the way, so what we're seeing, let me speak about that real quick here before I look at the Euro USD. So the daily is back into oversold here. And even if this triangle isn't correct, even if this may be just a flat, so like A, B, and then 1, 2, 3, 4, 5 here, that CPI is expected to continue to remain high tomorrow. And so if it is, you should see, again, the dollar rallying off that. Because if the CPI remains high, then that's more support for the idea that Powell and them are going to raise interest rates and keep everything on this faster track that they're talking about. If CPI comes in kind of cool, it's backing off, then that starts putting some ambiguity into what may happen in March. But as long as that CPI comes out high again tomorrow, we should expect the dollar to rally on that. Now see the euro here. I think you're talking about probably a larger one like this daily here. You're looking at this right here. Possible. Let me see if we see anything else that's going on. Let me kind of zoom out a bit here. See, I mean, just broader count here. If we look at this, somebody might argue that's an ascending wedge here because you got higher highs and higher lows. But if I look at this and I say, okay, well, so basically here's a, 1, 2, 3, 4, 5. So 1, 2, right? And then we get this down here and we go, okay, well, I don't even know here. Even if you wanted to say 3, 4 here, you've still got 1, 2, 3, 4, 5. So you've still got that, this area here, you've still got 1, 2, 3, 4, 5 coming down, finding resistance right here. Again, potentially ascending wedge rather than ascending triangle. And here's my other thought. If this is an ascending wedge here, then we should expect the rejection to be impulsive. Because remember, out of wedges, we break out impulsively from them or break down impulsively from them. So again, the idea that this kind of continues to push its way up here a bit, and maybe, maybe even goes a little bit higher there, or maybe that's the top right there. But then, come tomorrow morning, you get that CPI release, and you see that the strong breakdown, right? Like I said, the dollar would rally strongly. The euro should then drop strongly against the dollar on that. Yeah, I mean, if you want to count it kind of like that possible bearish scenario, A, B, C is W, X, and then you look at A, B, C. But see, you're still looking for that fifth wave. The same way on the dollar I talked about. You're still looking for that fifth wave. You get A, B, and then you have 1, 2, 3, 4. You got to have a fifth wave for C. So you still have at least a little bit further down, if that's the case. Right? So, yeah, I mean, let me see here. Yeah, they're phasing out bond buying, but they said they're still going to put money in that other program. They're still going to continue to print out money. That was the big catch. That's the big dovishness still in what they're saying. Lagarde and them are still talking about, wanting to stave off interest rate hikes and really tapering as long as possible, end of year or whatever. So yeah, I mean, so that's why I said it's important to watch this next one because their CPI just came out at 5%. Your CPI, I guess, over there just came out at 5%. So that's pretty high. So that, again, could very likely influence what's going on there with what they're saying. Yeah, and then we kind of see that, looking at here, I mean, there's a couple of different ways to maybe bounce in here and count this real quick. You could have a 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 potentially. You got a lot of overlap here and here. I haven't gone and actually counted that right off. Actually, I think I do have. Oh, I don't have much of a count starting from up here on this chart. I lost my other charts. I'll have to go back and count that. But, if this is going to be a 3 back, then this likely would have to be 5 up. Unless it's just, a whole bunch of sideways 3s here, right? Some kind of maybe triangle or something going on, right? If we zoom out here on the larger picture. This is kind of a larger picture. Again, your major areas of support resistance right there. Right in this place right here. Right up here. Now, so those are the kind of areas in the big grand scheme of things where you want to watch. The weekly, as you can see here, is almost broken out into overbought on Stoch RSI. We dipped down into oversold here. Got a bit of hidden bullish divergence, which with it right here doesn't make a whole lot of sense because it's continuation of bullish trend, but the trend has been down for the last year. And this is a local, it's not like any kind of like large thing here. It's locally here. But, again, we're between the S1 pivot and the pivot here on the weekly. So if you're just interested in the longer term implications of whatever's going on, what you want to see is a breakout above this swing high, right above the pivot here initially. So that's 1.16921. You want to see a breakout above that to really kind of feel strongly, much more bullish about the euro against the dollar. Till that point, it's still very susceptible to further down. It's still in jeopardy of falling further. Got a bunch of overlap in here. Again, just finding support in the same area right here. So if we break down below that, you just hit this little bit larger area of support here, and then we kind of see maybe a clearer 5 waves down, right? And you get out of the ABC or the WXY talk. So we'll see what happens in there. Personally for me, honestly, trading it doesn't matter to me. Again, I'm neither bullish nor bearish, just long money. So I just want to be able to figure out what it is as it does and be able to make some money with it. Forex market is just one of the easier ways to make money in trading, guys. Local account there, I've got to fix that. that bounced back there after this morning's update. So we'll take a look at that later. But anyway, here we go. We pulled back to the channel, the range resistance here. We're trying to rally off that. The count's really awful on this interior here, guys. God, I've almost done this for 2 hours. I can feel it in my voice. There's really an awful count in there to try and figure that out. We can see that off the swing low here, we got a 1, 2, 3, 4. So on that alone, there's your 1, there's your 2. We got the 1618 up here on that. So 1, 2, 3, 4. Give us a wave 5 right up here around, potentially right there around 43, 642, which is below that descending red resistance. But again, an impulsive breakout above the 1 and 4 hour pivot here, an impulsive breakout above that descending red resistance. Where price stays above that says, okay, that the wave 2 is probably done here, and the rest of this is no bueno, right? The only other thing I can say, guys, about the whole Fed thing is if March comes up and they don't raise interest rates, if CPI is cooling off and they don't raise interest rates in March, I think that gives a little bit more life to the markets. And that would be a way in which, if you're, concerned about Bitcoin and other cryptos, that would be a way in which you could really see the cryptos kind of really just blow off and run hard. But, again, if they don't raise it in March and then it comes up into the summer there, and then they decide to raise interest rates then, CPI, continues higher, raise it then, that could mark the end of legacy and crypto markets rising there. So it's just a lot of watching what's going on with whatever the Fed decides it wants to do, which is all just reactionary, right? But nonetheless, it kind of tells us what they're doing, what they may continue to do, and look at sentiment, what people are thinking, whatever. But I listed my concerns at the beginning here about crypto and where we're at. Some of the things that are happening. Again, Reese Witherspoon, and others. I know there's a few rappers out there at least. There's football players and basketball players out there making a lot of noise about cryptos and whatnot, and kind of joining in late to the game, right? And so often, especially in this kind of particular phase of the cycle we're in or whatever, that doesn't really bode well, normally sentiment-wise for it. But that doesn't mean the top is in at the moment. It means again, it could be building here. Again, when we look back, we talked, I discussed with y'all back over here when we decided it was probably coming down when we were up here. We talked about the fact that everybody was, oh God, I'm so glad I don't hear that so much more. But man, it was getting so stupid with the diamond hands and the, and they were just making up things, whatever. I don't even remember what they were, spaghetti fingers and just so much stupid stuff, paper hands. And it was such an apex up here. And you had the stupid laser eyes and all that nonsense. But you guys, hopefully you can look at it now, even if you didn't notice it then, or you didn't really listen to me about this being some sort of top back then. Hopefully you look back on it now and you kind of looked at all that and you replay that in your mind about how the market was at that time. That was a great teacher for sentiment. The real sentiment we talk about. I know a lot of times you hear people say, oh, my feed is all bullish or all bearish, so we're definitely doing this or that. Nah, that's silliness. That's not what we're talking about. We're not talking about curated feeds. We're talking about just the marketplace as a whole. What is it? What's going on with it? Where's that euphoria? And so, it was there. And of course, at that time, the Reese Witherspoon and them were coming in and really kind of talking more and more about it. And then, we had the naming rights with FTX and crypto.com. If I forgot one, guys, remind me. Those are the only two that I can think of right now that are doing that. Super Bowl ads with them, stuff like that. So it's built into the frenzy is what it is. Built into the euphoria. So again, that makes me uncomfortable as far as where we're going with everything, but nothing has happened yet that signals, hey, that I'm much more serious about possible downside. Right now, moved in sideways between the pivot, the S1 on the daily, right into this support area, rallying off that S1, large lower candle wick, wick there, doji candle, the local bullish divergence off there, Stochk RSI, bottomed out in oversold. A lot of confluence of stuff that says maybe there's a bottom there. But again, as I said, it could be just one down, two up, and then coming back. So we'll watch it as it plays out there to get a better idea. If this is a 1-2 here, then wave 1 of 3 should terminate in this area up here, the 62 to 69,000 area up here. So we should get a 1 up there, a 2 on that pullback, and then a 3 on a breakout. So, yeah. Oh, yeah, Melania Trump. Yeah, I forgot about that. She said she congratulated Bitcoin on its anniversary or something. I didn't really read the article. I'll be honest. I just saw the headline. But see, again, you got the big people coming in here doing that. And Matt Damon, yeah. Cringeworthy. The Crypto.com ad with Matt Damon. Man, talk about cringe, man. They just... I know why they do it, to convince you guys to jump in there and put your money in there, but it's purely about them making money, it's advertising, right? But God, that's the kind of stuff that really just makes me cringe. That's the kind of stuff that makes me go, I don't like that, So yeah. It's all really kind of crazy there. But anyway, so spaghetti fingers, whatever it was. But you see, here's the thing though, guys, this is the point. Everybody gets all hyped up, everybody gets euphoric, everybody gets crazy. You see it all over the place. You feel like you're missing out, if you're an amateur trader or not even in the markets at all, feel like you need to get in. Otherwise, you're going to miss out on the trade of a lifetime, but you do it at the top. And so even if you get in here and it rallies back up, to you, your bottom is here. For the rest of us, right? Our bottom's over here, right? So we feel closer to a top. Those that are just jumping in now because of all the hype and whatever else that's going on, this is their bottom. So they feel like it's going to continue going up and up, and they want to see the kind of returns that we had here, which means they don't get out when they should. And it comes against them, and everybody loses money. It's easy to sell into them, right? Because everybody, amateurs want to jump in there, and they miss their opportunity. Crypto.com and Matt Damon convinced them, right? So, that's when you talk about psychology of market tops, those are the kind of things that you look for. You will never get it the first time. So if this is your first time seeing that kind of market sentiment and having to explain to you where you can look back and go, okay, that makes sense. If that's your first time, you might feel a little uncomfortable the next time, but you might not get it right away the next time it happens. But it takes a few times of going through that to really kind of get used to it. Again, I've seen it back in, dot-com bubble, great financial crisis, Bitcoin's few tops we've had here. So I've been through it multiple times. So that's, I'm a little bit more attuned to it, but definitely pay attention to that. That's when I say sentiment, when other people talk about sentiment, that's what we're talking about. When we're talking about euphoric markets and whatnot, that's the type of thing that we feel. I mean, you should be able to look back on that right now and be reliving that. I mean, I think it makes me want to puke. It's just so obnoxious. But that's the kind of thing that you're really looking for with that. Okay? So, yeah, anyway. You bite your teeth every time you see Matt Damon in that one? Yeah, that commercial's really bad. Hank says that 68 was a clear top for him, so we'll see what happens with all that. But yeah, so we'll see what goes on here, right? Lewis Winthorpe, what's up? He says, the cable against the USD has my attention at the moment on the weekly. Found support at the long-term 200 MA and the high volume node, but falling volume heading up into the weekly pivot. Yeah, and generally, if the euro continues falling against the dollar and the Aussie does and the loonie does and all these kind of things, the cable should follow with it as well. Even if it's just for that one more move down, generally it should continue to follow as well. Yeah. So, all right. Oh, you just meant it was a clear top. It was a clear top for you just for then, not like a top. You're just saying just for the temporary top, interim top. Okay, I got you. I thought you meant when you said was a clear top, I thought you meant like end of the market, that's it. It's going in bear market. See you at 10,000 and then we'll go back up. Anyway, guys, listen, I have been here a long time. This is ridiculous. No, not really. I've appreciated you guys, spending some time here with me and kind of listening into my thoughts, allowing me to explain a bit about what I'm looking at and why, in terms of Bitcoin, kind of, if there's a top in, then here's what we'd be looking at. And we still got another rally up, even if that is, to do like a wave 2 before it comes back down, or a wave B or whatever. So all is not lost, in that case. But, the realities of there's still a lot of support and a lot of potential reason to think it's going to go higher. So now we just need to see if it follows through. We're going to watch these levels locally to see if that bottoms in right now or if we'll get one more little dip there. As well as my longer term thoughts and my longer term targets and everything. With the next halving being probably in 2024, usually the bear market, the low of the bear market is at about a year to a year and a half, usually around a year. And then we kind of move up from that. It's usually about a year and a half till we break out. So I think we've probably still got time for Bitcoin to, rally to 100K if it wants to do that, or maybe higher. It's just some really ridiculous, maybe even a blow off top type thing. Just in terms of the time we've got left till the next halving hits. But, nonetheless, we're kind of, I think, at a pretty crucial area here. We definitely need to see some follow through of the upside and some real support added in, some movement up. So we'll see what happens with all that. I hope you guys have a great week. As always, you can join us over at howtotradetowin.com. We'd really love to have you there. If you do join, be sure to say hi. Just jump in one of the channels. The Bitcoin, the one of the best channels to jump in is the Bitcoin analysis channel. That's where most of the people kind of hang out. We have a decent amount of members, but a lot of them don't normally talk regularly. And it is what it is. That's okay. For some people, they want to discuss a lot. Other people would rather sit back and kind of just listen to what's going on. Sometimes people don't feel like they know enough to say anything. But it's always good to say hi and meet everybody. And I'll tell you what, you'll find a lot of really, really helpful people in there. They don't always agree with me, and that's all right. As long as people are respectful, that's all we look for, guys. The idea is to give you one, a place to learn. Because even learning, you can apply it differently, guys, okay? You can get a different result than somebody else gets, right? That's what analysis is all about. But it allows you to learn how to analyze correctly. It gives you a place to practice and discuss with others, many of which are really accomplished traders, some of which are brand new traders as well. And so you get this great mix of talking and what people are looking at, understanding what may be going on there. So that can be, really, really helpful. It's just a place for immersion, guys. You just kind of get dropped in there and you're forced to listen and learn, right? That's what it's all about. So we'd love to have you there. If not, I'll see you guys on Friday at 11 a.m. Central Standard Time. So hopefully you'll join in. Hank, enjoy your time in Thailand. Everybody else, have a great day as well. And just remember, guys, we talk about all this other stuff, but at the end of the day, whether the market's going up or down or you know what it's doing or not, the most important part of what you do every day as a trader is risk management. Because the only thing you control as a trader is how much you lose, okay? So make sure that you're always, always, always working on that risk management. All right, guys, y'all take care, and I'll see you either in Discord or I'll see you on Friday. Take care.